With the Ellis team at RE/MAX, it's a family affair. Always call the Ellis team, they'll handle you with care.
Welcome to the future of real estate. I'm Brett Ellis of the Ellis team at RE/MAX Realty Group down here in sunny Southwest Florida. Today, new numbers just came out for the year 2012. These are the official numbers, and I wanted to get them right up to you because I think they're very important and they kind of go in line with what we've been saying all year in 2012. But we haven't done an update, regrettably, since October, so this is high time. And I've been waiting for these numbers to come out. Now that they're here, let's get right to them. We'll do a future show. We'll probably go into a little bit more in-depth analysis than this, but I didn't want to waste any time. So let's share with you kind of what's going on here. As you can see, since 2009, 2008, probably 2009 was I would say, the bottom of the market. We still had some pockets in 2010 and 11, but we kind of bounced around down here, and we said we're going to bounce around the market, but then we saw some upticks here. And you see this general trend, and that's kind of where we are now. Now, I did a graph on the year-end prices, and what this is it's a average of the median, the monthly median for each year. And as you can see, back in '93, we had very slow growth. Not to say it was unhealthy, but it was slow. Then we had rapid growth up into 2005, and of course, we all know we fell off the cliff. I call this the classic shark graph because it looks like a shark fin here. But as you can see, we did bottom out here in 2009. We started back up just a little bit, up about $3,000 in 2010, then up about $12,000 in 2011. We're up about 24% by our calculations. The median price, the median monthly price, rose from about $105,469 in 2011 to about $131,108. And the way that breaks down is at the end of the year, you know, in November we're at $137,000, December we're at $134,000. You'll have some blips up and down because these are median prices, keep in mind, not the mean prices. But overall, we're up about 24%. And here's what a graph looks like, kind of on a monthly basis. The yellow section here, if you can see that on camera, that's 2012. So we were riding high, you know, all through 2012. 2011 was the green. Each year has been predominantly higher than the previous year. Obviously, there's some blips up and down, but you kind of see 2009, 2010, 2011, 2012. Kind of interesting to see it in the different formats here. I've got a format here, but we're going to redo this chart because we switched over some data systems. You can kind of see that the maximum year on record for the number of sales was 2009, and this is by quarter, then followed by 2010, followed by 2011. 2012 was probably, you know, our fourth or fifth best year on record. 2005 may have actually beaten that. So our sales are down just because our inventory is down. We don't have enough to sell. Now here's where I really want to get into. These are the numbers that come out, and they're raw, so we've broken them down for you so you can kind of see what's going on at a quick glance. Whoops, I want to go to this chart right here. This one's kind of nice to look at because it shows you what our current inventory levels are at right now and what they've been historically. For instance, January 2012, we had about 25% more inventory than we do now. So you wonder why sales are down. It's because inventory is down. It truly is. However, our month supply, we're sitting at about 4 months supply. That's not unhealthy, but it's not perfectly healthy either. We'd like to see probably closer to a 6-month supply of inventory. And we've got 4 months, so it's definitely a seller's market. However, I'm going to go into some things later on. It's not a seller's market that you would have runaway prices. We have seen prices go up 21%, but that's a function of the mix of properties that we're going to go into here in a little bit. The distressed sales, not distressed sales. Keep in mind, we are still a recovering market. And the only thing from making this thing a runaway freight train is the economy. If we took real estate in a bubble here in Southwest Florida, our market is poised for rapid growth because we're underfunded, so to say. We have not enough inventory. So we would, under normal conditions, we would have runaway growth. We don't have that now because we're tempered by you know, a debt plan that's unstable. We've got, we do have low interest rates, but we've got the mortgage industry is in turmoil right now because it's very hard to get a mortgage. A lot of steps you have to go through. And then you've got some distressed sales to work through, and we don't have the jobs that we're going to need to really sustain the runaway growth. And I'm not saying runaway growth is healthy. I'm just saying we we would have that probably if we had a more stable economy. So as the economy improves, look for the potential for higher growth here. Let me take you to our next slide that I want to get into. And as you can see, we've sorted through a lot of data here to bring you this. So don't worry about all that. We're going to go into more in depth here in a few days. But this is what we're looking at in the fourth quarter of 2012. And I'm going to compare that with the third quarter of 2012. The third quarter of 2012, we had our median price on traditional sales at $150,000. Now that number is up to $162,500. So as you can see, prices are going up. Now, foreclosures are still riding about 17%, and church sales are still about 18-19%. But look at the median price, third quarter to fourth quarter. You've got 87,000 on the foreclosures. Guess what? They're up to 102,000 in the fourth quarter. There's perhaps less of them, and the ones that are coming out, they are rising in price. And on the short sales, in the third quarter, they were 95,000 median price. They're up to 102. So you can see our traditional sales are going up by 12,500 just in a quarter. You've got median prices up by $15,000, and you've got short sales up by about $7,000. So we have a rising price market, and all three sectors are now catching up in the residential market. The next thing I want to take you to is this is our average days on market. You can see our average days on market is down to 97 days for short sales, but that's not what I really wanted to get into. You would expect with inventory down, days on market to be down. This is a graph of December 2012 versus November of 2012 and back to December of 2011. Let's look at last year. Last year we had 29 sales over 500,000 that were traditional. We had 4 short sales and 0 foreclosures. But this year, fast forward to 2012, we had 54 sales over 500,000 in our MLS. So almost double. So you don't think prices are going up? They're going up in all sectors. Look at the 200 to 500 range. Last year, we had 150 sales. This year, 174 sales. Look at the 100 to 200. We had 170 last year, 222 this year. The only sector that is going down is the under 100,000. It's gone from 166 down to 135. And you might say, well, why is that? I thought everything was going up. It is going up. What's happening is you're not finding homes under 100,000 anymore. They're going away. So our prices are going up. The 100 to 200 are now going up into 200 to 500, some of them, which is, so you're seeing these leapfrog, they're jumping up. So it's not that anything is down. I don't think the sector's down. You just can't find it anymore. We have people call us up and say, hey, I want a $50,000 house. Well, you know what? Back in 2009, we could find you some $50,000 houses. In 2012, 2013, it's very difficult to do that anymore. Anything on 100,000 sells very quickly. A lot of times there's multiple offers, might need some work, and it's definitely away from the beaches. So if you're out there in internet land and you're calling up and you want a beach home for $30,000, don't call because it's not there. I don't care what you read in the Wall Street Journal back in 2009 or in USA Today in 2008, it's not there today. And that's our job, is to educate the market. We're not mean, we're just telling it like it is. Now back in 08 and 09, we had to tell sellers how it is. And we still have to tell sellers how it is. We will have sellers who are unrealistic no matter what the market is. Back in 2005, you know, what I like to say is we have unrealistic sellers in all markets, whether it's up, down, or sideways. And they will some of them, a small percentage, will always overprice if you let them. When our market boomed, remember that graph I showed you back in 2005? When it boomed up here, we had sellers, believe it or not, that overpriced and missed that market. We had sellers back here that overpriced and missed that market. The difference is, if you overprice and miss the market in a rising market will catch up to you. In a declining market, the last thing you want to do is overprice, because you'll get caught chasing the market down. So if you're here and the market goes here, then you got to go here to here, here. You're chasing the market down. That's a position you never want to be in. Thank goodness we're in a rising market. If your property is worth this and you price it here, it's just a matter of time till the market will catch you. So we always say, don't ever get caught chasing the market down. But buyers, here's advice to you. You don't want to get caught chasing the market either. If you want to buy, Now is a good time. Interest rates are low. If you're a cash buyer, it's great. Our economy is still down. It's still holding the market down. Don't get scared away by a 21% price increase from last year. We are still way below, in some cases, replacement cost, and it's certainly from the highs of the market. There is still affordability in our market. $131,000 for the average house is not a lot of money in 2013. And you know, there's homes, some are more, some are less. But what I'm saying, condos, same thing. Condos are in that same range. I would buy now because we have the chance for even greater appreciation once the economy turns around. Now, if you're one of those believers that thinks the economy's never coming back, maybe I wouldn't buy. But most people think we get this debt crisis under control. We got low interest rates. We've got favorable reasons to get, you know, companies hiring again. We'll get this economy back. You know, a lot of that depends on Washington, but I can tell you, as right now, the Southwest Florida real estate market is alive, kicking, and it's healthy, and it's recovering. And when I say recovering, it's a process. You know, we still have 36% distress sales, 64% traditional sales. Now, I remember when that was flipped. It was like 70% distress sales. So it's recovering. I won't rest until we get down to about 5% distress sales. Back in the old days, we probably had about 5%. We're not there yet. We're still at 34. So there's still some things holding this market back, but that's going to turn. And I'm really encouraged what 2013 leads to us. All indications to me are all systems go. We could be in for a really good year in 2013. We're just entering season now down here in Southwest Florida. The weather is great. If you're not down here, come on down. The beaches are fantastic. The weather's great. And the real estate market is stupendous. You've been watching The Future of Real Estate presented by the Ellis team at RE/MAX. Don't forget to call us 239-489-4042 or visit our website at topagent.com. Thanks for tuning in.
With the Ellis team at RE/MAX, it's a family affair. Always call the Ellis team, they'll handle